I'm going over a quick post I made. It's kind of just mental masturbation, but I decided I'd do it anyway. I know the original MSTR gang has done a lot of videos on sort of like where this thing could go, but I decided to take a whack at it myself and just do a little bit of thinking. And I'm just going to give you a couple raw numbers here as to the potential MSTR stack at $1 million per coin, and then what kind of yield they could get on it. So I show you the power law, and I use the power law as just a model to kind of estimate the average cost of MSTR's Bitcoin purchasing. And over the past 4 years, I think their purchase average has been around $35,000 a Bitcoin. And depending on what power law model you use, it predicts a average or trend line fair value anywhere between 35K and 40K per coin. So they were a little below the power line, their DCA cost basis, Microstrategy. But regardless, it's kind of like a useful tool, I think. And so if you extrapolate out over the next 4 years, then their purchase cost average would be anywhere from like 150K to 200K per coin. And that's using this 7 billion that Ben Workman puts forth as like a 50% cash flow debt service model. And what that gives you is a Bitcoin stack of 250,000 Bitcoins pretty much before the next cycle. If the cycles continue, then MSTR will have roughly 250,000 Bitcoins. And I'm just kind of assuming they're going to be capped out in their Bitcoin purchasing at around 250K Bitcoins before it goes to 1 million. And what I do here is then I just extrapolate that out. Okay, what is that worth? Obviously, it's worth about $250 billion worth of Bitcoin if Bitcoin's at $1 million a coin. And as you can see here, around 2032, the power law might flip to the upside. It might not hold, but it's been a good, accurate sort of long-term average rate of compound growth. And so I think in the 2030s, you can assume Bitcoin is going to be compounding at above 20% annually, roughly. And based on those numbers, you'd get essentially it'd be a 50 billion a year increase in the stack of their Bitcoin. And obviously, if you're trying to put a US dollar NAV premium on this, it's pretty difficult to do. And I think people by that point will have a sense of how fast Bitcoin's compounding and this decreasing rate, because like people nowadays use, the S&P 500's index performance as kind of like the cost of capital, whether they use 8%, 9%, 10%, whatever value they use, but they have like a rough estimate of how fast it's compounding over time. And I think people will have migrated or have adopted sort of a fair value compounding rate, decreasing compounding rate of Bitcoin, the power law. And for that reason, obviously the US dollar denominated premium on MicroStrategy will have to be much higher if their stack's growing by 20% in US dollar denominated value. But at that point, we might be getting close to like a Bitcoin standard. And if we're getting close to a Bitcoin standard, then why would their stack be valued at anything more than the actual fair value Bitcoin value of their Bitcoin stack, which is just the number of Bitcoins? I think the argument that obviously Punter Jeff and those guys have made has been this yield, much like a bank where you lend out your cash reserves based on like a fractional reserve banking system. And so I use a conservative estimate of 30% reserves, whereas like a traditional bank only has to keep about 10% of their balance sheet in cash reserves. In this case, it'd be Bitcoin reserves, and then a 5% interest rate. And I think with hard money, that interest rate could be much higher potentially, but regardless, this would yield MicroStrategy on this assumed stack of 250,000 Bitcoins, roughly 8,750 Bitcoin per year interest. This at $1 million per coin would be $8.75 billion per year, just in interest on their stack. And considering they have the largest stack and are pretty much uncatchable at this point, like this in itself would make the company just like a dominant value play. Like no one would be able to, it would be so difficult to value this, period. And regardless, this would justify a Bitcoin premium. I think what I concluded here in my little mental exercise was that not only is a US dollar premium justified? Obviously it is, just because of the underlying Bitcoin compounding, the debt structure, and then any sort of yield they get on their Bitcoin. But a Bitcoin premium on their Bitcoin stack would be justified if they're able to lend out their Bitcoin. And in that case, obviously, like, it's just like mind-blowing valuation. So yeah, I think that's an interesting thought process. And if you're looking at the expected value of any sort of outcome, you have to include the low probability but high return outcomes. And as we always say, I guess MicroStrategy looks like a pretty asymmetrical bet. Thanks for watching. That's all I have for today. I'll catch you next time.